India has a monopoly in the IT sector. The IT sector's revenue is highly dependent on the US and Europe. With the hint of interest rate cuts in the US, it looks like doors are again open for another bull run in IT, which has been underperforming in the last 2 years. We know that TCS, Infosys, HCL have significantly rewarded shareholders in last decades. But do you know there are a lot of hidden gems in IT with immense potential and fundamentals like these large caps? If you are new to my channel, please do subscribe. Also check out my playlist, Best Stocks to Buy for the Long Term. So let's get started. The first stock is a digital engineering and cloud transformation partner. They have operations in 40 countries. With nearly 4 decades in the IT industry, this stock has transformed from a conventional IT solutions provider to a leader in digital transformation. This stock has grown to become a US $227 million corporation. I am talking about Mastak Limited. The company offers solutions that support various sectors to deliver quality services. The company offers solutions to government, insurance, and financial services. The company has partnered with various IT giants for delivering quality products and services, namely Microsoft, Oracle, and IBM are amongst others. The company's primary offerings include application development, maintenance support, ERP and cloud migration, business intelligence analytics, agile consulting, assurance testing, and digital commerce. Mastak's client base is impressive, with the top 5 and top 10 clients accounting for approximately 30% and 43% of the company's revenues, respectively. With a global footprint, the company has a significant presence in the USA, UK, Netherlands, Canada, Australia, India, Malaysia, Singapore, and various countries in the Middle East. In the fiscal year 2022, the UK-Europe contributed to approximately 68% of Mastak's revenues, followed by the USA at 17.7%, the Middle East at 8.7%, and the rest of the world at 5.6%. Mastak, with a market capitalization of 8,388 crores, operates with a current stock price of 2,737 rupees. Price-to-earning ratio is 31.12, lower than its sector pay ratio of 68.22. Stock price rose 55.89% and outperformed its sector by 22.69% in the past year. Debt-to-equity ratio of 0.22 is less than 1 and healthy. Return on equity for the last financial year was 17%. The company has consistent sales growth and increasing cash from operations. 100% by rating from analysts. The second stock is the world's first enterprise-wide ACI CMM Level 5 company. It's a key player under the RPG Group. This company operates globally with a strategic presence in India, the USA, UK, Europe, and Africa. I am talking about Zensar Technologies. The company operates in 2 main segments: application management services and infrastructure management services. They have a diverse clientele spanning across industries like high-tech manufacturing, consumer services, and banking financial services. Zensar boasts a diverse client portfolio, with the top 5 clients contributing to 31.9% of revenue. The company's revenue is predominantly derived from digital and application services, 83%, and digital foundation services, 17%. Zensar's revenue is well distributed globally, with the USA accounting for 70%, the UK/EU for approximately 19%, and South Africa for approximately 11%. Zensar has forged key partnerships with giants like Microsoft Azure, Adobe, Amazon Web Services, Google Cloud, Oracle, SAP, Salesforce, and Guidewire. These collaborations strengthen Zensar's capabilities in cloud computing and enterprise applications. Zensar Technologies, with a market capitalization of 13,446 crores, operates with a current stock price of 594 rupees. Price-to-earning ratio is 25.57, lower than its sector pay ratio of 68.22. Stock price rose 168% and outperformed its sector by 135% in the past year. Debt-to-equity ratio is 0 as the company is debt-free. Return on equity for the last financial year was 11%. The company has consistent sales growth and increasing cash from operations. The company's profit growth is better than the industry median. 50% by rating from analysts. The third stock is an Indian multinational technology company that is focused on engineering, manufacturing, data analytics, and networks and operations. This company is present across 22 countries and has operations across the globe. This stock is recognized among the consistently high-return stocks in the Nifty 500 for the past 5 years, showcasing a track record of sustained performance. I am talking about Cyient Limited. This stock is one among the world's top 30 outsourcing companies and operates through 8 strategic business units. The company has its headquarters and development facilities in India and serves a global customer base through its subsidiaries and joint ventures in the USA, UK, Germany, Japan, Australia, Singapore, and India. The company's 85% revenue comes from business services and 15% from design-led manufacturing. During fiscal year 2023, it derived around 54% of its revenue from the America, 27% from Europe, the Middle East, and Africa, and around 19% from Asia Pacific. The company has more than 300 customers across the globe, including 29 Fortune 500 companies across multiple industries. However, its top 5 customers contribute about 28% to its revenues during fiscal year 2023 for services. Cyient, with a market capitalization of 24,362 crores, operates with a current stock price of 2,198 rupees. Price-to-earning ratio is 36.59, lower than its sector pay ratio of 68.22. Stock price rose 167.28% and outperformed its sector by 134.08% in the past year. Debt-to-equity ratio of 0.27 is less than 1 and healthy. Return on equity for the last financial year was 14.83%. The company has consistent sales growth and increasing cash from operations. The company is giving better long-term returns than the industry. 73% by rating from analysts. The fourth stock is a leading cloud communications provider headquartered in Hyderabad. Specializing in application-to-person messaging, this stock enables businesses to connect seamlessly with their customers and intended recipients around the world. TrueBlock, developed by this company, is the world's first blockchain-enabled commercial communication stack enabling businesses to build trusted relationships with their consumers. I am talking about Tanla Platforms. The company boasts an impressive clientele, including major players such as Vodafone, Airtel, ASEPAR, Etisalat, Facebook, LinkedIn, HDFC Bank, Kotak Bank, Axis Bank, and many more. What's even more impressive? Around 50% of Tanla's top 50 customers have been with them for more than 7 years. The company's revenue is well diversified, with the top 20 clients contributing 48% of the total. Tanla Platforms has achieved some remarkable milestones in the last 5 years, impacting over 1 billion lives daily through the delivery of OTP messages. These messages played a crucial role in enabling over 100 crore vaccinations through the CoWIN platform. The company is also a global leader in innovative technologies such as blockchain, AI, ML, spam and scam prevention, holding over 4 patents. They command a 35% CPAS market share. 32% of their revenue comes from overseas operations, with a significant portion coming from euro-based business. India, however, remains a stronghold, contributing 68% of the revenue. Tanla, with a market capitalization of 14,727 crores, operates with a current stock price of 1,096 rupees. Price-to-earning ratio is 28.62, lower than its sector pay ratio of 68.22. Stock price rose 46.24% and outperformed its sector by 13.04% in the past year. Debt-to-equity ratio is 0 as the company is debt-free. Return on equity for the last financial year was 29.49%. The company has increasing cash from operations. 100% by rating from analysts. The fifth stock is a global technology giant with a proprietary consumer intelligence platform. This company turns ads into recommendations, helping marketers effectively connect with their potential and existing users. This stock has 21 patents filed, with 6 already granted in the US. I am talking about Affle India Limited. This company operates on two primary platforms, the consumer platform and the enterprise platform. The company offers a range of cutting-edge services, including a customer data platform for marketing automation, technology enabled by a rich patent portfolio, and high-engagement video, rich media, and native ad experiences. Affle's clientele is just as impressive, boosting names like Tata 1mg, Swiggy, Fossil, and many more. Affle collaborates with platforms like AppNext, Jampp, and RefX to amplify their reach. Affle has been busy on the acquisition front, with notable moves like acquiring 100% control in Jampp and a substantial stake in AppNext. They have a global footprint across Asian, European countries, Middle East, and USA. Affle's revenue breakup reveals that about 99% comes from the consumer platform, showcasing its strong foothold in the market. Geographically, 65% of their revenue comes from outside India, highlighting their global influence. Affle, with a market capitalization of 17,006 rupees crore, operates with a current stock price of 1,213 rupees. Price-to-earning ratio is 64.33, lower than its sector pay ratio of 68.22. Stock price rose 6.53% and underperformed its sector by 26.67% in the past year. Debt-to-equity ratio of 0.07 is less than 1 and healthy. Return on equity for the last financial year was 16.69%. The company has consistent sales growth and increasing cash from operations. 67% by rating from analysts. The sixth stock is a major player in the IT industry, offering a diverse range of services and solutions across the globe. The company's primary focus is on delivering information technology services to clients in the United States of America, Europe, Middle East, Australia, and India. I am talking about Sonata Software. Presently, top 5 customers accounts for 54% of revenues, and the top 20 customers account for 71% of the total revenue of the company. Sonata is gearing up for the fast-growing social, mobility, analytics, and cloud solutions space, with long-standing relationships with global Fortune 500 companies and continuously adding clients. Geographically, the USA accounts for 52% of revenues, with Europe and the rest of the world making up the remaining share. On-site revenue constitutes 43%, while offshore activities contribute 57%. Sonata has a balanced revenue mix, with AX business, application development and maintenance, and ERP services collectively making up 37% of business, emphasizing their focus on digital products. Clientele is a key aspect of any successful IT company. Sonata Software added 29 new customers in FY20, maintaining a resource utilization rate of 87%. The company acquired GA Busters Ltd in Melbourne to increase its footprint in Australia and explore new geographies in Southeast Asia and Europe. They have also ventured into agricultural tech and retail in these regions. In the healthcare segment, Sonata strengthened its presence in the USA by acquiring Sopris System in December 2018, making a significant investment of Rs 50 crore. Sonata, with a market capitalization of Rs 21,567 crore, operates with a current stock price of Rs 769. Price-to-earning ratio is 45.34, lower than its sector pay ratio of 68.22. Stock price rose 184.43% and outperformed its sector by 151.23% in the past year. Debt-to-equity ratio of 0.38 is less than 1 and healthy. Return on equity for the last financial year was 34.74%. The company has consistent sales growth and increasing cash from operations. 80% by rating from analysts. The seventh stock has played a pivotal role in transforming India's digital landscape. They are involved in creating digital public infrastructure and developing innovative citizen-centric e-governance solutions. They systemically created a national infrastructure for capital market development in India. I am talking about Protean eGov Technologies. NSDL e-governance infrastructure got rebranded as Protean eGov Technologies. Over the years, the company has evolved into a key player in the development of citizen-centric and population-scale e-governance solutions. Protean has successfully implemented and managed 19 projects across various ministries and autonomous bodies. Their clientele includes the Ministry of Finance, Information and Broadcasting, Skill Development and Entrepreneurship, Education, Electronics and Information Technology, Communication, and the Ministry of Commerce and Industry. The company holds a leading position in the market, with a 45% share in new PAN card allotments and a 58% share in tax issuance numbers. The company has partnered with distribution networks like Nearby Technologies Private Limited, Fino Payments Bank, Vakrangi, and Payworld Digital Services Private Limited. Protean eGov Technologies has achieved numerous milestones since its inception, from launching the online tax accounting system in 2004 to crossing 100 million e-sign transactions in the fiscal year 2021. Protean, with a market capitalization of 5,469 crore, operates with a current stock price of 1,352. Price-to-earning ratio is 51, higher than its sector pay ratio of 28.89. Debt-to-equity ratio is 0 as the company is debt-free. Return on equity for the last financial year was 12.48%. The company has consistent sales growth and increasing cash from operations. The company is giving better long-term returns than the industry. The stock was listed recently and already doubled from the listing price. The 8th stock is offering next-generation solutions and services. Their services cater to various industries such as automotive, banking, retail, and more. This stock has tripled in value since the launch of its initial public offering, IPO, in September 2020. I am talking about Happiest Minds Technologies Limited. The company is doing the same thing as its peers, like Mindtree and LT Infotech, but it's doing it better. Happiest Minds is leveraging its partnerships with big players like Google, Microsoft, Amazon Web Services, AWS, Salesforce, and others to dip its toe into a bigger pool of potential customers. This company specializes in digital transformation enterprise solutions, product engineering, infrastructure management, security, testing, and consulting. This company is a global player, with a strong presence in the United States, United Kingdom, Australia, Canada, Netherlands, Singapore, Malaysia, and Dubai. The company generated revenue primarily from infrastructure management, digital business services, and product engineering. The company plans to acquire digital companies to fuel growth, as it aims to reach its revenue target of achieving $1 billion by 2031. The company is looking to acquire 3 to 4 profitable digital companies in areas such as low-code, no-code, and artificial intelligence, AI, among other areas. Happiest Minds, with a market capitalization of 14,241 crores, operates with a current stock price of 935 rupees. Price-to-earning ratio is 61.37, lower than its sector pay ratio of 68.22. Stock price rose 1% and underperformed its sector by 32% in the past year. Debt-to-equity ratio of 0.56 is less than 1 and healthy. Return on equity, ROE, for the last financial year was 27.53%. The company has consistent sales growth and increasing cash from operations. 67% by rating from analysts. Remember, always conduct thorough research before making investment decisions. I hope you found this video informative, and subscribe to our channel for more informative videos.